Hello guys. Good morning, good afternoon, good evening from any part of the world you're watching this video from. As you all know, my name is Daramola Michael Oladuni. YouTube channel is Mike Talk Finance. We talk about finance, investment, business, and we've been doing some interesting sessions so far. First of all, I want to apologize for my inconsistency. Last week I was supposed to shoot a video, but because of one thing or the other, having some meetings and some deals to actually sort out. That was why I was not present, and I'm very, very sorry for that. As many faithful followers we have, and many potential faithful followers we are going to have, I'm very, very sorry for my inconsistency, and I'll try to do better as time goes by. Okay, today I want to start an important series. It's a topic of which this is what I do professionally, Forex trading. I'm an investor, a multi-billionaire profitable investor and currency trader. That is what I am. Yes. So I trade the Forex market. I also have a lot of information. I give people advice on also assets and different kind of asset investment and recommendation myself. So this is what I do professionally. I studied international business and finance, obviously. I studied economics undergraduate. So this is what I'm passionate about. And I keep building myself so that I can represent better and better. And of course, give you something wonderful as the need arises. Okay, so thank you very much for watching and thank you for coming. Share, like, subscribe, and also comment if you want something. If you have a question on something you want clarity about, don't hesitate to let me know and I will do just to it shortly. And today we want to be talking about Forex Trading 101. Of course, I've given a video about Forex Trading, but I believe we are improving, and of course, we need to be improving with our content and information we are delivering so you can be up to date on how the market is and what the market is all about. So today we'll just be doing an introductory part, talking about the introduction of what Forex market is, the market itself, the types, the market itself, what the market entails and the types of market we have. This will be what I'll be doing today. So make sure you continually watch this series and don't just watch, subscribe and share. Make other people know that something is happening here, guys. I keep telling you, we are going to have 100 million subscribers and we are going to have 100 million views. You think I'm joking? Watch and see. Okay, introduction. What is the Forex market all about? What is the Forex market all about? And I'll be using my pen. This is my pen. My phone, my laptop is a screen touch, so I'll be working on my screen. Yeah. So what is the Forex market all about? As it terms, Forex. Oh, this is so nice. It's just a new software I discovered from Microsoft. Forex. Foreign. I'll be spelling everything at the same time. Foreign. FOR. Exchange. So this is it. Foreign exchange. Countries does not depend on themselves. They depend on each other to survive. We have countries that have one natural resources and another have a different natural resources. So country A and country B, I'll try to be as explanatory as possible. These guys have gold and these guys have diamond, for instance. So they have gold and they have diamond, right? Now, we have people in this country. We have citizens in this country. We also have citizens in this country. This include businessmen, teachers, lecturers, students, investors, and all of them. Now, this guy wants to get married and he wants to buy his wife a gold jewelry. So it means he need gold, right? Now, this guy wants to get married. He wants to buy his wife a diamond jewelry. It means he needs diamond. That's what it means. So, because this guy have gold, it means he will not be able to provide gold, diamond for his wife, for his fiancée. this guy have diamond in his country and he wants to buy gold for his fiancée, it means he will not be able to do that. So there have to be a form of exchange. They have to be a form of exchange. That's what it means. So if that exchange is not in place, it will not be possible for these guys to give their fiancé gold or diamond as it may be. So what this means is that there have to be a form of exchange that one country will have to meet the other country that have what it desire so that they can exchange their goods and their services. And in economics, I studied economics, it's called the law of comparative cost advantage. And the law of comparative cost advantage, the law of comparative cost advantage. The law of comparative cost advantage said that a country should specialize in the production of goods and services it has absolute advantage and import those goods and services it has comparative cost disadvantage. So what this means is what I'm good at, what is efficient, what I'm very good at, I specialize in it and I import what I am not good at. That is the law of comparative cost advantage. And that's simply what it is. So it means that country depends on each other for goods and services. So if a country depend on each other, there have to be some form of exchange. We are not in the barter system where we exchange dowries, coins, and all of it. We use money, currency, fiat currency. So there has to be some form of exchange to be able to buy gold or to be able to buy diamond. So basically, this is what Forex is all about. I believe I'll be able to do justice to this question. Okay, so now we will move further. Let me just clear my screen. We'll move further. Move further. Goodness, what is this? Then we'll move further. We move further. We move further. Sorry for that. Okay. X. Yeah, I don't need this. Okay. Then we'll move further. Sorry for that, please. Just trying to wipe up my screen. Very soon I'll start using good editors, so you won't be seeing all these jargons. All right, so basically that's the introduction of what Forex is. You can watch it and watch it over and over again, then you'll be able to have a basic understanding. So we are now moving to what the market is itself. So that's just a background knowledge. It's very important that you understand that. That will make you to know, is this thing actually legit or is this thing is actually not legit? Because people have that question in their hearts too, like, is this thing real? Like, just buy this, sell this, and you say you're making money. This is like gambling. I want you to know this is economics, this is business, this is investment, this is strategy, this is innovation. That's what we are doing here. So countries will continue to depend on each other. So for the reason that countries will depend on each other, it means the forex market will continue to exist. That's basically what I'm trying to say. So market itself now, the forex market. So we have different countries. Now I will use okay, we have the UK. So we have United Kingdom. Oh, I think I need to clean my it's kind of really misbehaving now. Okay, yeah. I think we are now good to go. Okay, so in the United Kingdom, for instance, so we have countries. I want to do something. Country. No, this is not what I want. Sorry. So we have country. We have currency. So every country have their currency. So I'll list a few countries. United Kingdom. We have Nigeria. I'm a Nigerian. We have China. We have Australia. We have Canada. We have United States, USA. Now, UK spend GBP. the Great British Pounds. Nigeria spend the NGN, Nigerian Naira. China spend the Chinese Yuan, CHY. Australia spend Australian Dollar, AUD. Canada spend Canadian Dollar, CAD. And US spend United States Dollar, USD. So what this means is that this country are specialized in certain services. This country is specialized in certain services. This is also specialized in certain services. This specialized in certain services like that. They all have their services they're specialized in. But Nigeria has something to do with China. So we need China in one of our, there's something that China produces that we need. UK need Nigeria in something that Nigeria produces. Canada need Australia in something that Australia is actually producing. The same thing happens like that. The same thing happens like that. The same thing happens like that. Now this is an example. So we need each other. Remember the law of comparative cost advantage. No country is independent. We depend on each other, right? So for this reason, if I want to buy something I'm staying in the United Kingdom and I want to buy something in Nigeria, it means I have to convert my Great British Pounds to Naira. That's what it simply means. So, for instance, if I want to convert my Great British Pounds to Naira, I have to convert for now £1. £1 is about, this is the symbol of Nigerian Naira, it's about 775 Naira. So it means for every £1, I have, if I convert it, it can buy something worth of 775 Naira in Nigeria. Okay, so it means that if I have £1,000, I can get something worth about 700 and let me put it this way, 775, right? 775 Naira. That's what it means. If I have this £1,000, right? So I just want you to have the understanding. So country will continue to depend on each other. It means for every one Naira I have, if I want to convert it to pounds, that may be like maybe 0.0000 something like that, right? So for one Naira, you get 0.0000 something worth of pounds. That's what it means. Not pounds this time. It's in p's, not in pounds. It can't be in pounds. It's in pence or penny rather, because it's not £1. So for one Naira, I get 0.000 something penny. Of course, that's what it means. So generally, this will continue for life because countries will depend on each other. So definitely, the market will continue for life, and this will be where I will stop concerning the markets. Now we are taking a step further. So I believe you are getting better to understand what the Forex market is. And this will help you to know if this is where you belong to or this is not where you belong to. Now, we have different types of currency. In the Forex market, we have currency pairs. I'm still talking about the market. We have something called currency pairs. Now, let me write that down. It's called currency pair. Or no, rather, currency, then currency pairs. Right. So the reason for currency pairs is because countries does not depend on each other. Remember the previous discussion we just had before I wiped the screen. We depend on each other. So we have currency for country. We have currency pairs for countries doing business with each other. So we have 7 major currency pairs. We have 7 major currency note. So we have 7 major currency, not currency pair. We have 7 major currency. Now, let me take this out. We have 7 major currency. We have 7 major currency. We have several currency pairs. So we have 7 major currency and we have 7 major currency pairs. I'm bringing it forward, and we have several other currency pairs. Now, don't get yourself confused. So the major currencies we have, these are countries that does a lot in terms of the economic capacity of this country. This is where we're actually mentioning them, and they trade them a lot in the forex market. So we have AUD, we have USD, we have NZD, we have CAD, we have JPY, we have Euro, we have GBP. So this is the 7 major, right? This is the 7 major currency we have. Now the 7 major currency pair, no, not 7 major currency pairs, 6 major currency pairs. The 6 major currency pair is, now I want you to strike this USD and pair USD with everybody here. USD, yeah. So AUD USD is a major currency pair. NZD USD is a major currency pair. CAD USD is a major currency pair. JPY USD is a major currency pair. Euro USD is a major currency pair, and GBP USD is a major currency pair. Now, don't get yourself confused, because it might be USD CAD, it might be Euro USD, it might be GBP USD, or it might be USD NZD. But just know that any of these 7 major currency pair or 6 major currency that is paired with USD, that is the major currency pairs. So it's as simple as ABC, right? So any other thing that does not have this USD, for instance, AUD CAD or NZD Euro or GBP AUD, for instance, these are all minor currency pair. And we have exotic currency pair. So any currency that I didn't mention here, for instance, ZAR, South African ZAR, ZAR Euro is actually an exotic currency pair. CHY AUD is actually an exotic currency pair. So we have major, we have minor, and we have exotic. I believe I've done just to that, right? Okay. Now let's go to the markets now, because I know a lot of people want to see. You have been actually speaking since you have not shown us any market, any charts. We want to do the next thing we'll be talking about is now the charts. How does the chart works? So we have types of markets. We have different types of markets. We have basically a ranging market and a trending market. We have a ranging market and a trending market. Under the ranging market, some people divide it into two, the ranging and the consolidating. So we will definitely have just two types of market. Now we are talking about this now. So we have trending markets and we have ranging markets. So those are the two types of market we have. Now I said under the ranging market, some people still divided into two. They still added another one. It's called the consolidating market. So sometimes if a music comes out, let's say Kanye West release a music, or Nathaniel Bassey release a music, or Beyonce release a music, or Mercy Chinwo, or any of these great artists from the gospel, from the world aspect. People that are into, we have Christian artists, we have artists that are love artists, and different kinds of artists. Understand me? So once they release a song, It's trending everywhere. There's a song that used to come to my mind every time. You wanna bomba, you wanna chill with the big boys. That song. It's something trending. Like everybody starts, you are hearing that music. You are hearing, you know that this is something that is trending. And after 1 month or 2 months, it just died down. So it means that music is no longer trending again. That's what it means in the market. The market can be trending upward and it can also be trending downward. So trending markets are markets that are going upward or coming downward. So a market trends upward, a market can trend downward. So that means, in other words, it is called a bullish market, bull, then ish. Bullish market. This is called a bear, then ish. So it's called a bull and a bear, a bullish market and a bearish market. Bull, bear, then the ish. So bullish and bearish. Market is going up or trending downward is called a bull market. Market is trending downward is called a bear market. Bullish and bearish. So the market that is actually ranging is within a range. So sometimes the music can go up, come down, it trend again, come down, it trend again. Something can pick the music up, it started trending again, then it comes down. So the same thing it is. So market can be ranging, ranging, and ranging. So it's within this range. So in this position, you want to be selling. In this position, you want to be buying. In this kind of market, you want to only be buying, right? In this kind of market, you want to only be selling, right? That's what it simply means. And a consolidating market is a market that is not ranging or is not trending. So it's more of a sleeping market. Investors are not doing anything. So the market is just, then at some point the market might spike upward or it might spike downward. Then it started trending or it started ranging. So basically after a range, there's always a trend. That's basically what it means in the market. So this, I'll just give we'll just go to the screen now to just have a look at what this is in the market itself. Okay, so I go to my charts. So this is my chart. This market is called this is gold market, ZAO USD. I hope you can see my screen fully. This is called gold USD. This is the gold market. The gold market is okay. Now you can see this is an example of an exotic currency pair because I didn't mention gold, so it's an exotic currency pair. Though it is paired with the USD, it's an exotic currency pair. So let's just look for ranging market. And let's look for trending market. So of course we've seen trending market, right? This is a trending market. This is a trending market. The market is trending up, the market is going up and coming down. This is an example of a trending market. And that's basically how that one works. And so that's a trending market. Now, so this is a consolidating market. Goodness. Just give me seconds, 2 seconds. I just want to pull up an app so I can be more practical, showing you guys how this stuff works. 2 seconds, please. Well, while the app loads, let's just move along. I promise not to make this video long, but it seems as though it will be. Okay. Okay, I think the app is loading. Yeah, the app is loaded now. Okay, so I want to use the pen here rather than the other one I was using. So now you can see this market was a little bit quiet at this point in time. This market was a little bit quiet. So this is an example of the consolidating we're talking about. Consolidating. The market was actually not telling us if it's going up or coming down. It's just a quiet market. Then after that, remember I said it's quiet, then there's a spike downward or there's a spike upward. So this is exactly what has happened. The market spiked downward, but previously here, the market spiked upward. So I said after a consolidation or range, there's always a trend. So the market spiked upward, then it's going to consolidate again and it spiked downward. So this is exactly what we mean by that. All right. So let's go to the range I was talking about. This is an upward trending market. The market was trending upward. I think I need to change my pen color. I love the black pen. Let's see that. Okay, yeah, love the black pen. Okay, so the market is actually it went up, came down, went up, it came down, went up, came down, went up, came down. So you can see the market is actually trending up and down. That's an example of a trending market. Another example of a ranging of a downward trending market is I'll look for an example. Okay, this is a ranging market, for instance. Sorry, I have somebody on the background. Sorry, it's my friend. I'm sorry for that distraction, guys. So we have an example of a ranging market. So this is a ranging market. You can see, for instance, let me give you a practical example here. I don't want to make this video long, but it seems as though this will be long. All right, so let's put it this way. Let's pick it again, somewhat within this area. Yes, let's put it this area. Okay, so you can actually see what exactly happened. So the market is within this range. It was actually going up, coming down, going up. It was about coming down, then it broke out to give you a move upward. So that's an example of a ranging market. Let's move forward to see if we can have another. Yeah, we have just been seeing the bullish market for now. Yeah, so I think this market actually trended downward. So we can see this market trended downward. The market moved downward. Yeah, downward. The market moved downward. So in this kind of market, majorly, you actually want to be selling. I'm looking for more perfect example to give every one of us. All right, let me get perfect example. That's a bit clearer. Okay, this is a perfect example, but I'm looking for a perfect example. The reason being because gold has, at this point in time where we're doing this analysis, gold was actually more of a trending market. So this is an example of a downward trending market. So you can see that it came down, went up, came down, went up, came down in this time. But generally, the market is downward trending. So basically, that is what the trending upward market. This is the bearish market. We've talked about the bullish market, the consolidating, and the ranging market. So this is basically what we are actually referring to from the whole discussion we're having on the whiteboard screen. So back here, we talk about Forex Trading 101. We'll move further next week. Introduction. We talk about the comparative cost advantage market in terms of different country and their currency, depending on each other. We talk about currency pairs, major, minor, exotic, and talk about types of market, ranging market and the trending market. I will also talk about the consolidating market. So basically, this is what we talk about today. So tomorrow, next week rather, we'll be talking about more important things. So come here next time. See you soon. See you next week. I'll be discussing more important thing about the currency market. Now, you're not paying for this course. This is free of charge. So you should count yourself very, very lucky. Trust me, some people are paying $1,000 to get this, sincerely speaking. And when you'll be surprised, it's just a PDF they'll be reading to teach them. So I've tried to break it down in a way that you can all understand. But if you have any question, please don't hesitate to let me know. And for now, like, share, subscribe. See you next week, guys. Cheers. My name is Mike Daramola. The channel is called Mike Talk Finance, so you can also call me Mike. And this is what we do about in this video. We talk about finance, business, and investment. Cheers, guys. I love you so much. Chase your dream and also do it with integrity. Bye for now.